Welcome to the final project presentation for the Southern New Hampshire University course IDS 403. This is submitted by Daniel Bentley and is titled Constraining Banking Services. Introduction. Social groups in some way direct nearly every aspect of technology. Technology also plays an important role in mediating human relationships. An individual's behavior is influenced by four forms of regulation: laws, norms, markets, and architecture, or in this case, technology. The bank has a desired future digital target state. To get to the target state, the bank requires an industry-leading digital platform and a plan to get customers to migrate to those digital platforms. This involves constraining non-digital banking services. This presentation will review influences including social practices, technology, and non-mechanical technology. It will then review the issue of constraining bank services and the solution, plan, and benefits. Social practices. Social practices have shaped technology and has begun to shape society practices in almost every method of interaction. Each successful digital service advances, builds, and grows not only its specific target, but also horizontal and vertical linkage of technology and society. Kevin Kelly, in a discussion of the next 5,000 days of the web, he states that if he had told us 10 years ago that we would have the current state of web connectivity, technology, social construction, and interaction that we do today, we would have just called him a utopian dreamer. He said that one of the things that we're learning from this era is that we have to get good at believing in the impossible because we are unprepared for it. Does technology determine human action, or does human action shape technology? As discussed in Technology and Society, Building Our Socio-Technical Future by Trevor Pinch and Wibby Bike, while technology determinism suggests the structure and design of the technology itself can dictate the behavior of its users, technological constructivists would say that it is the users that shape the technologies. One can't fully understand how a society uses a technology without actually realizing that technology's social context. Societal change has become influenced by the reluctance of the users to trust more centralized structures and hierarchies, privacy and proprietary information being the most significant drivers. Technology proliferation. Technology has influenced the behaviors and operations of banking services by reducing costs and becoming more horizontally accepted by all banking platforms, merchants, and consumers. 5 years ago, 65% of deposits occurred in a banking center. Now, only 34% are completed in the banking center, 52% are done by an ATM, and 14% are done via mobile banking. 5 years ago, there were 24 million mobile logins per month. Now there are 200 million, many of which that are now virtually requiring no physical instruments like credit cards or checks. There are now 18.4 million active mobile users, where there were only 6.3 million 5 years ago. 5 years ago, there were no mobile sales capabilities, where now mobile accounts are responsible for 20% of digital sales. It's obvious to see that the trend to digital banking services is on the increase. Technology has influenced the behaviors and operations of banking services by reducing costs and becoming more horizontally accepted by all banking platforms, merchants, and consumers. Non-mechanical technology. Non-mechanical technology has shaped our interactions. The non-mechanical technology that impacts banks, consumers, and investors are regulations, especially those instituted post-2007. In speaking of the best prison design, the Panopticon, Michael Foucault stated, that the inmate must never know whether he's being looked at any one moment, but he must be sure that he may always be so. This is the same principle that regulators wish to convey to the banks. In the design, visibility is the trap, and it creates a sense of permanent visibility that ensures that power should be visible, yet unverifiable. Non-mechanical regulations and fines. The current goals of the financial industry and government regulators is to prevent, through regulation, the negative economic catastrophe that occurred post-2007. The lack of these protections nearly crippled the country and led to a massive impact of housing foreclosures and bank bailouts. The regulatory protections put in place, similar to what Daniel Suarez pointed out concerning autonomous robots in The Kill Decision Shouldn't Belong to a Robot, the ways humans resolve, in this case risk, shapes our social landscape. The new regulations post-2007 created a non-technology impact instituted by the regulatory agencies called fines. The government agency fined financial institutions for their operational behaviors concerning mortgages. This totaled approximately $174 billion by 2010. Positive and negative aspects associated with regulations. The positive impacts were increased required internal controls. These are costly to the banks to produce, but improves controls over fraud. This non-mechanical technology also contributed to higher consumer and investor confidence and an increase in investments. The ideal behavior that regulations are trying to produce is to ensure a safer financial environment. There are many agencies involved in dictating new regulations. The big three are the OCC, SEC, and CFPB. Their governance forced new rules and strengthened existing controls at financial institutions. These combined to revolutionize a greater risk-averse culture and new risk appetite. A negative impact is the increased labor and processes required by the banks to support new regulations. In the case of National Bank, this was a 10 times increase in risk-related activities, people resources, and costs. Use of technology has impacts on societal issues. The use of instinctual assessments is beginning to be impacted by knowledge databases. There is currently no control over the ecosystem of data and technology that influences our decisions, foundations, and information on the internet. As technology is built on top of these information sources, what accountability mechanisms will be available to ensure that we base decisions on facts? What will society use to place extra checks on decision makers? Will we trust each other or instead trust what data might tell us about each other? Issue background: the banking environment and influencing the customer. In 2007, the bank began enhancing operations and technology to better serve the consumer. It is an industry leader in providing digital banking solutions to its clients. The history of where it was yesterday, where it is today, and where it will be in the future is a unique and interesting journey. Post-2007, there was a dramatic decrease in interest rates. One of the primary sources of income for a bank is the net interest margin, NIM. This is the difference between how much a bank pays for money and how much it can make loaning it out to the consumer. A significant driver of the rate that is given the consumer is based on the Fed funds rate. Although recently there have been increases in the Fed rate, the low interest rate environment continues to pressure NIM and provide headwinds. For the bank, every 1% interest rate increase translates to $4.6 billion of net interest income over 12 months. Also since 2007, there has been sluggish consumer spending. Due to low interest rates and flat consumer spending, the bank turned to reducing expenses to bolster the bottom line. Reducing expenses includes an increased emphasis towards digital solutions and operation simplification. The project that is guiding this is called SIM. SIM and influencing the customer towards digital technology. The SIM, or Simplify Project, is a collection of various process and technology projects focused on improving operations and reducing costs. The goal is to be more productive and flexible by helping to simplify operations. SIM is also helping drive responsible and sustainable growth for the company. It is expected to give a $2.6 billion expense reduction and generate approximately $2.5 billion in increased revenue by 2021. A large part of the SIM project are issues focused on bringing the bank to the target digital solution. This involves enhancing technology at many customer touchpoints and includes influencing the customers toward the chosen direction of the digital banking technology and services. Constraining non-digital banking services to digital solutions. With the bank, there has been technology developed based upon societal desires and requirements. This is expected because we assume social and technology forces to be intertwined. The strategy being used to influence customers towards the chosen direction of the bank's target digital solutions involves investment in bank technology and financial resources. This has developed to a point that a new target state of digital banking involves influencing the customer to adopt the new digital technologies in order to operate more economically and in a whole new manner to grow the profitability of the bank. This involves constraining non-digital banking services in an effort to move all consumers to digital services. Digital service targets. The bank has made great strides towards its digital servicing targets. It currently has a #1 service footprint with the most efficient deposit gathering engine in comparison to its competitors. This has resulted in the highest deposits per branch and the lowest operating cost per $100 of deposits. The bank is also #1 in both credit card revenue and profitability, and #1 in both home equity and mortgage origination customer satisfaction among all banks. The bank is also experiencing high investment asset growth. These impressive rankings speak not only to the customer deepening model, but also the development of the best digital platform in banking services. This has contributed to the bank being #1 in digital sales, online banking functionality, and mobile banking functionality. Digital services strategy. The heart of the digital services strategy for the bank is listening to what the client wants. Clients want to make transactions so simple that they don't even have to think about it, and this is done through simple and integrated automated banking across digital ATM and voice channels. Clients want to know that their banker will be there when they need, and this is being done through expanding the sales force and for designing new age professional settings in the financial centers. Clients want to be recognized for their loyalty to the bank, and this is being done by addressed through Preferred Rewards program, a deepening of the client relationship, and structuring bank functionality towards life stages and priorities. Investing in bank services are much more different for consumers who are working in building their wealth than those in retirement. Digital services, a failed automated teller project. The goal was to merge automated teller machines, ATM, and live video tellers with a goal to eliminate the number of tellers in financial centers by giving ATMs a more humanized, personalized feel and extended operational hours. Each ATM upgrade was targeted to eliminate 5 associates per machine, but it resulted in only reducing about 800 associates over the full bank population. That equivalent is only a half a person per machine. This still was a savings of $40 million, but the actual results were much lower than projected because customers still wanted to go to the financial centers for privacy concerns. While it was a favorable technology, it did not drive customers from the centers to the digital platform. It really just opened up another channel for the consumers to use without reducing costs. Digital services successes. While the ATA project was somewhat a failure, Other digital services have become great successes. Currently, a consumer can deposit checks through their phone and make withdrawals using their phone at cardless ATMs. Mobile phones using the National Bank application can make appointments to see banking specialists at the local financial center, as well as speak live with a call center representative. This application also allows authentication without having to enter passwords, usernames, or account numbers. The consumer is able to access their banking information and process transactions using the thumbprint recognition technology of the mobile phone. One of the greatest digital service successes is the digital wallet. The mobile phone application allows payments and purchases to be done through a variety of banking industry horizontally aligned payment channels, including Apple Pay, Android Pay, Samsung Pay, and the new multi-bank application Zelle. All this functionality allows financial transactions to happen more quickly and more reliably than any non-digital solution. Targeted population and digital adoption. Digital adoption is tied closely to the breakdown of the consumer by generations. The use of digital technologies, as expected, is more common with millennials and Gen Xers. The growth of digital adoption with the baby boomers generation continues to increase at a healthy percentage rate. Also, as expected, seniors, those 72 years of age and older, prefer traditional non-digital servicing. A study by National Bank shows that children currently under the age of 10 will never use cash checks or credit cards in the traditional form in the future. 71% of that population won't know how to write a check. 42% won't use payment credit cards, and 36% will only shop on their smartphones. The question remains how to get more baby boomers and seniors to adopt to the digital solutions. This becomes a tie between technology and society. Addressing consumers slow to adopt digital banking services. To know how to influence consumers from non-digital solutions to the adoption of digital solutions is important to understand the generations. For example, millennials are motivated by money while Gen Z are motivated by saving money. Baby boomers are motivated by benefits and pensions, while Gen Xers are similarly motivated but also need a good work-life balance. By understanding these as well as other characteristics, services can be designed and marketed to the correct generation profile to fulfill their specific needs. If their needs are available through digital applications, the more clients will gravitate towards them. Technological momentum. Society and technology both exert influence on technological momentum. Mobile banking is 10 years old and today is driven by digital mobile solutions. It is the most used channel with nearly 22 million active mobile users and more than 3.7 billion logins per year. This industry-leading functionality introduced over the past decade includes mobile check deposit, which was launched in 2012. It now averages nearly 340,000 checks deposited per day, the equivalent capacity of 880 financial centers. Bank by Appointment, which was released in 2014, currently schedules almost 30,000 financial center appointments per week, which is up 117% from the previous year. The debit lock and unlock feature for cards has nearly 340,000 customers using it every month after only being operational for 1 year. The spending and budgeting tool rolled out to all consumers in January 2017 has 2 million users, with 89% of them in the mobile banking app. The trend of digital adoption grows each year and has not leveled yet. With each new release of the banking application, new and upgraded functionality is built in and becomes more and more intuitive. Non-digital cost versus new digital banking technology. As technology continues to progress, the cost of non-digital servicing will become unsustainable for banks. This will force banks to increase the use of digital servicing technologies. Replacing call center interactions with ATM technology is approximately a 96% cost decrease. Reducing teller interaction by using digital mobile technology is about a 98% cost decrease. As the need for call centers and financial centers decreases, additional infrastructure assets can also be liquidated by the bank. 1,600 branches have been eliminated since 2008 with a savings of $1.6 billion. The transactional format of financial centers are being transformed to centers providing financial advice. The plan: constraining non-digital banking services in an effort to move all consumers to digital solutions. The bank will make non-digital servicing for retail customers more difficult to access. There will be fees for some services, and call center queue design will provide for longer service levels. Inbound call channels will refer customers to no-cost, inline digital solutions. Certain service requests will not be available non-digitally. Current non-digital staffing will be reduced to support service levels for call centers to produce a reduced average speed to answer from 4 minutes to 8 minutes. This will reduce labor costs by over $300 million per year. Charges will be assessed for manual processing items, not to offset costs as much to drive volume to digital alternatives. For the preferred or high wealth customers, they will receive better service level and full service for non-digital service requests. Current technology will be utilized to enhance the digital experience and to implement the plan. The bank is building a world-class consumer services network that transforms the financial centers into centers of advice and convenience for the clients. This will make banking and investing available at all of the locations and through an unparalleled mobile platform. Complementing that experience, the bank will also have advanced centers to provide another way for clients to connect, get advice, and handle all of their banking, lending, and investing needs. Smart screens will welcome clients and guide them in the space and provide an interactive experience and virtual tour of the center and all that it has to offer. Video conferencing rooms will be available for clients who need private and secure one-on-one advice. Clients can easily access the room with a digital wallet or debit card. Current technology will be utilized to enhance the digital experience and to implement the plan. Consumers will be offered digital technology services at all levels, and the bank will continue to stay on the leading edge of digital servicing. Extensive marketing will accompany the digital push to market the breadth and depth of services available. Consumers will be charged for non-digital services and advised on how to obtain what they need digitally and at low or no cost. Staffing of non-digital servicing will be reduced and result in service levels that encourage customers to look at digital alternatives. Summary benefits of constraining the customer to digital platforms. There will be a significant reduction in costs and profits will increase. This will help the bank gain an edge over competitors and drive the path of the industry towards digital banking services. The bank will provide customer training for onboarding customers to digital alternatives. Digital solutions provide more accurate, quicker, and easier banking information and client financial planning services. As clients begin to realize this through their adoption, they will deepen their relationships with the bank and therefore be influencing society by the installation of this technology. The time to migrate all generations to banking digital services hinges on how technology moves people forward to a better future and how successful constrained non-digital activities are at forcing reluctant adopters to the target digital platform.